Hi, everyone. Today, let's talk about Masimo. This is a health technology company, and they are really bringing an innovative outlook to this business. Whereas most companies like Medtronic continue to improve on their devices, they're making this more of what we generally think of as tech in terms of connectivity, wireless tech, and somewhat similar to cloud technologies into the healthcare sector. So, first, I will go over their website and the things that they like to emphasize. Then I will talk about the Morningstar report. Then I will go over the fool's analysis of Masimo. Then I will play a clip from Mad Money where he talked to the CEO of Masimo. Then I will go over the technicals. Then we will talk about some of the potential trade ideas. However, this is not a great stock to trade options on. If you like trading stocks and options and making money, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So starting with their website here, you can see they're trying to take the medical technology business from just the hospitals over to the home to where patients can be monitored over cloud technology and what they call the Masimo safety net. Of course, they still sell products and they're using things like the MBA to demonstrate their ability to improve the lives of their customers and really anybody who wants to monitor their health. Especially here when it comes to this radius thermometer they have that attaches to your child's skin, and you can monitor their temperature from your phone. You can see their products here. The radius thermometer connects directly to their app. The pulse oximeter, which is their primary business, also connects to the app, allowing healthcare workers to monitor patients' oxygen saturation via the network. And then you have your own personal pulse oximeter, which also connects to the network and allows doctors to check your vitals. Of course, they have some other products like this one that helps with opioid withdrawals, and they have a package specifically for the Rona. It's worth mentioning here that their pulse oximeter is significantly more accurate than other competitors, and it works for all skin pigmentations. So pulse oximeter technology uses a green light that reflects off of your circulatory system, so the pigment in your skin does matter, as it does affect how much light is reflected, which is then turned into the amount of oxygen saturation in your bloodstream. And you can see that demonstrated here in terms of accuracy. So they have a false alarm rate of 100% specificity. And then true alarm detection is almost 100% here for the Masimo set. And the closest competitor here is Philips. But honestly, it's not even that close. And most of these knockoffs are significantly inaccurate. So be aware of that if you're in this market. And it's definitely important for healthcare workers to understand that the technology that they're using, if it's not this type of product, could be potentially inaccurate. They also list a significant number of medical studies that I'm obviously not going to go through, but it is on their website if you're interested. Moving on to the Morningstar report, you can see that they're saying it's currently a little bit overvalued at 133% price to fair value. The fair value at 195 and the current price is actually around 275. But it seems like every time I look at the Morningstar report for any kind of growth company, they're always saying that it's overvalued. And this is generally because you're investing in the future of the company, not what the company is worth now, which is what Morningstar seems to do a better job of. Looking at the market cap, we're close to $14 billion, has a narrow moat, stable trend, and high uncertainty. Again, pretty common for any kind of growth stocks. Currently, they're saying it's only a 2-star, which is usually a sell, not a strong sell. 3 is generally a hold, and then 5 is a strong buy. Back in 2017, they were saying this is a strong buy for just under $100 per share. And since then, the stock has been going pretty steadily up. And they've increased their price targets a couple of times, but currently they're still saying that it's a little bit overvalued. Looking at the bull and bear cases here, they're saying they have a large amount of products upcoming, with around a $10 billion opportunity in terms of product diversification. They say their products are significantly superior to competitors' products, allowing them to leverage their pricing and generate a tailwind in terms of revenue. Their balance sheet is also very strong, with high levels of reinvestment, and they are currently exploring acquisitions, just like the ventilator company that they recently purchased. Looking at the bear case here, they say further rollbacks in the healthcare industry could lower the amount of demand for single patient devices like Masimo's pulse oximeters. Once their patents run out, Nellcor, which is owned by Medtronic, could generate similar products, which could drive down their profit percentages and generate a little bit more competition. Also, it could be more difficult for hospitals to pay a higher per bed fee for automation, which would again make it a little bit more difficult for Masimo to sell their products, driving down demand. Looking at their competitors here, you can see this is the most expensive stock by stock price, but by market cap, they're actually the cheapest of the companies because this is a growth stock that is up and coming. General Electric is pretty close to fair value, but this is a $100 billion company. Medtronic, again, very close to fair value. And this is a $160 billion company. And then the cheapest competitor here is Philips, which was the most competitive in terms of technology. And they are the highest price here at $47 per share versus the fair value of $38. Looking at the price to sales, price to book, and price to earnings, clearly Masimo is the most expensive. But if you invest in this company, you're banking on the fact that they're going to continue to generate high growth in revenue and that they will be able to compete with these other companies for the long term. And this is true generally whenever you're investing in any kind of growth company. They look overvalued on paper, but they have to grow into their evaluation. And you could see some pretty dramatic price swings during that period. Moving on to the Fool's analysis, they say that the Rona has produced a strong demand for blood oxygen sensors, which is Masimo's core business. The technology that they invented has produced more than 100 independent studies that it is the best available. The previous 9 months of revenue generated a 22.9% increase from the same period last year, significantly above high single digits growth for the prior years. This could certainly be attributed to the Rona, but it's also the fact that their technology seems to be better than everybody else's. Then they talk about some of the same things that I mentioned before, the Masimo safety net, their sleep technology for measuring quality of sleep. They have a sensor that detects if a person has fallen and allows physicians to remotely monitor patients. Next, they talk about the first of its kind technology, providing relief for those suffering from withdrawal symptoms from opioid-based drugs. They say there is a little bit of concern that the better than expected results is pulling future sales into the present because hospitals and patients are aggressively buying this technology when it would have been a slower transition had the Rona not affected the healthcare sector. While maintaining this blistering pace in the short term may be difficult, in the long term it will be a benefit. And then they show the difference between Masimo and the S&P 500, where it has massively outperformed. Up over 600% since 2016, where the S&Ps are up just over 100%. Next up, let's see what Kramer has to say.
Masimo. Here's a medical device company that makes non-invasive monitoring systems, especially pulse oximetry systems that take your pulse and monitor your oxygen levels. As the virus spread, we've needed a lot more of these machines because more ICU patients, well, means more sales. Plus, Masimo's come up with some new products like a remote patient monitoring platform that allows healthcare workers to keep track of your vitals from a safe distance. Oh, in March, we learned that they're acquiring a German ventilator manufacturer called TNI Medical, something else we desperately need right now. No wonder the stock surged to a new all-time high today.
So to start, he went through all of the points that I mentioned previously, basically the rundown of the bull case.
Learn more about how his company's handling the pandemic. Mr. Kiani, welcome back to Mad Money.
Great to be with you, Jim.
Sir, I think that your company is performing a service that I want people to understand. It's two parts. One, I've got the Masimo safety net, but I've also got the thing that I check 4 times a day, which is my Masimo pulse oximeter. One is that people don't realize that the pulse oximeter in many ways is more important than the thermometer. And second, people don't understand how contagious it is to go into a patient's room versus what you offer. Explain.
From inventing a technology set, pulse oximetry, that works even when the patient's moving or has low blood flow, to making it tetherless, wireless. So as you said, you could put the patient in the room, let's say the ICU bed, bring the monitor outside of the room, and instead of walking into the room to check on the vital signs of the patient, which means you got to put the PPE equipment on and maybe waste what there isn't enough to go around anyway, you can now remotely monitor the patient, and when you need to go inside, you go inside the room to give care to the patient.
So here he's clearly emphasizing the safety aspect as well as the hospital aspect of his devices, something more relevant to the Rona, whereas I have kind of emphasized the more remote use from hospital to home or physician to home, or even just for personal healthcare use. He's clearly more focused on what's driving demand for him, which is in the hospitals right now.
And something you said earlier about the thermometer, unlike the thermometer, which any thermometer you buy, whether it's got a cool UI or not, is going to be accurate, pulse oximeters aren't all accurate. And unfortunately, even the good ones for the hospital suffer from patients moving or have low perfusion. And the knockoffs coming out of China, they can't even track desaturation, most of them.
Well,
so
it's funny you mention it.
a
I brought a
product that's
knockoff
reliable,
with me. I have a knockoff with me,
Yeah,
Joe. You can't
good.
see it. And I tried the
All
knockoff
right.
3 times. I should be in a hospital right now. Then 3 times, I'm the healthiest guy in America. There is just a great difference. Now, one cost me, yours is down $30 on Amazon. I don't know what that's about, but this is not what you want. You want the complete system. One is just a thing. It's a gimmick. But what you did do is create this system you just mentioned where you can go home, this safer place, and monitor yourself. You can't be in that hospital once you have it in safety zone, right? You want to be monitored at home.
Finally, here they get to the point that I think is the most relevant. They have the best tech, and they can do it from the house. If your physician can monitor you from the home, that definitely changes the whole name of the business, and it also forces them to get at least one of these per person so that they can be monitored in the home. Whereas if you're in the hospital, maybe they put it on, they share it between patients and sanitize between. But if you're in the home, you obviously need your own product. This also generates a little bit of a safety bubble, whereas if you're in the hospital, you're potentially getting exposed to other things.
Yes, for many reasons. One, when the surge happened, like places in New York or Ohio, there weren't enough beds for every patient. So the same exact technology that's been used in hospital that we developed over 30 years ago, over 200 million people are being monitored. We now have made it possible to send patients outside the hospital, including the home, which you're probably the most comfortable in, and allow clinicians to remotely monitor you.
Well, we should talk about the safety net. And the reason why that's so important, explain to us, it has to do with the lungs are the pressure point here. Knowing how they're doing can really only be measured safely by a Masimo, correct?
That is correct. Like Dr. Peter Pronova said on the webinar we did a few weeks ago, he said they can only do this because they trust our monitor to give them real actionable data.
So here they emphasize the value to hospitals, allowing patients to stay out of the hospital, reducing their overall costs, but still monitoring those patients to ensure they are getting the care they need. And if the data says they need more, they can immediately notify those patients and get them further care. And then later on in the video, they talk about their Masimo Net system and that a lot of different hospitals are signing on to this system, getting more into the cloud side of things and the technology sector. And as I said before, I think the software behind this company is really what's driving this high price to earnings. Anything with a software side tends to drive up PE ratios because those earnings tend to come at a lower cost than delivering hardware. If you want to watch this full interview, it is linked in the description. Looking at the technical analysis here, going back to April, this is the daily chart. You can see we had a really strong rally into May, topping out at that 250 price range. We then retraced back down to around 215, rallied back up, and we've been chopping around in here all the way until we broke out of that range on December 1st. And since then, we broke out, dipped back down to that 250 price range where we found a little bit of support. And since then, we've rallied. The question is, can this stock rally up to new highs from here? It's going to have to break through this resistance level at around 280 or 283. But if we don't take new highs, I expect to see this retrace back down, potentially to lower lows, as it's coming off a pretty strong rally of about 4 months in duration. So to see a little bit of a retracement here does seem reasonable. Looking at the potential options pricing here, it's not very liquid as they only have options on the monthly basis. So I would look to trade maybe the March 19th options, not very close to my 45 days to expiration that I generally prefer. But you could get down to a strike of around 250 on the expected move. I think it might be a little bit dangerous to trade in that range right now as it is at all-time highs. But your next option here is 123 days to expiration, which is a little bit long in duration for me. However, if you do want to be long this stock for longer than that period, it's not a terrible option. And you can get a strike down here at 235 to 240 for that 75% out of the money chance, which is generally where I like to trade. And if you trade that 240 naked, if you're trying to get into this stock position, you're effectively buying the stock at 235 in 123 days. Not a great return on capital if you do want to put up the full value here, but you could trade it as a spread, moving to a naked option if the stock drops after that. in an effort to minimize your losses as well as maximize your capital efficiency. Personally, I don't have a position in this stock right now, and I may look to trade it once the April options open on the monthly iteration. But for right now, I'm probably just going to look to either buy this stock slowly over time as a long-term trade and not mess around too much with the options, as I generally require a little bit more liquidity and a little bit more availability for my options trading candidates. Comment down below what you think of this company. Are they overpriced, or will they fulfill their current evaluation? Will competitors come in and mimic their products once their patents have expired, or will they maintain a competitive advantage? Just to reiterate, I don't own any of this stock right now, and I also haven't traded it in the past. Definitely like and subscribe if you got any value out of this video. I make these analysis videos pretty regularly, so if you like this content, definitely like and subscribe. Of course, none of this is financial advice. This is all for entertainment purposes, and have a great day.